Latest CPI print came from Stats Canada this morning, 7.7%, the highest in the last 4 decades. What does it mean for Canadian economy and what does it mean for you as a Canadian household? In this video, we are going to talk about that, so let's dive in. Alright, if you're new to my channel, my name is Yasin Nizami and I make these videos to educate you as a common person about real estate market in Canada, about money matters, how the money works, how the financial system works, how the global monetary system works, so that you can make an educated decision about your financial well-being. So if you are interested in any of these topics, consider subscribe and let's get back to it. So the latest CPI print came out this morning, 7.7%, the highest in the last 4 decades. It's more than what we saw in the April, 6.8%, and it is keep going up. And pretty much it is confirmed that we haven't seen the peak yet, because we saw even more rising gas prices in the month of June. So when the June figures comes out next month, we will see an even higher CPI print. So that is putting a lot of pressure on Bank of Canada, because that's their #1 mandate. And they have been telling Canadians about their forecasted CPI, and that estimate has been missed one after the another. And we are seeing the record-breaking inflation coming out from the Stats Canada. Mind you that this is government published figures and they are always underreported. The actual inflation is much higher, at least in double figures, if not in 3 figures. So what's going to happen next month is Bank of Canada is expected to come up with another jumbo rate hike, most likely 75 basis points, but it is also possible they can come up with a 100 basis point rate increase. This will have a significant impact on the mortgage rates as well as the credit card loans. So if you have some sort of a credit card loan on you, or you have home equity line of credit, or you have mortgage as a homeowner, you will be impacted. Of course, if you are locked in a minimum term, you won't see your mortgage payments go up immediately, but you will see the amount of money going towards principal will be much reduced than compared to the amount of money going into the interest. And when you renew your mortgage, you will see a jump in the monthly payment. Let's say you were paying your mortgage payments based upon 2.5% for the last 5 years. Now, if you renew your mortgage during these times, you will see a significant jump in terms of the monthly payment, because you will be renewed at least 4% if we see a jumbo rate hike by Bank of Canada next month. Now, you can also increase your amortization to reduce your monthly payment, but the downside is you will be paying more money towards the interest than the principal. So it's not a very healthy situation financially, and we are heading towards much difficult financial times, and most likely this is going to be recession, because what Bank of Canada is trying to do, they're trying to keep their mandate. Their mandate is to control inflation. Their mandate is not protecting your house price or your stock portfolio or your crypto portfolio. They don't even care about that. Their mandate is to reduce price increases and keep the inflation under control. And they would try anything possible to do that. Now the question is how far they can go, because if it's going to sink the economy completely, they will have to reverse their course. But I think we have to see until that point. I believe this will definitely going to trigger recession, because what Bank of Canada is doing, they are killing the aggregate demand. Aggregate demand means consumer spending. When the spending reduced, this is deflationary in nature. It is going to basically reduce the economic growth and GDP activity in the economy. So that's where we are heading. Let me know what you think. What is your opinion about your financial situation and how you're seeing this is going to get hurt you in the long term or in the short term? Let me know what you think, and I'll see you in my next week video. Take care.